I'm joined today by Steve Higgins, who is the Director of Storage and Refining Solutions at the Royal Canadian Mint here in Ottawa. How are you, Steve?
I'm great. Thanks for having me back, John.
Well, it's a pleasure, and we have got a surreal environment, and we've seen an amazing election in the United States and a correction in the gold market during the last quarter of 2016. And now gold seems to be acting better, and along with it, silver. But the last time we talked, I started off by asking you about your background and your role at the Royal Canadian Mint. So let's, for our audience, do that again.
Okay, great. I'm Director of Storage and Refining Solutions at the Mint. I helped the Mint start the Mint's Exchange Traded Receipt program. So that's a program that has gold and silver stored at the Mint and traded on the Toronto Stock Exchange. We did that back in November 2011 was the initial public offering, and then I've been managing the program since, including the launch of a silver program that's designed exactly the same.
Well, tell us about the Royal Canadian Mint. It's been around a long time.
Yeah, the Mint's been in its location on Sussex ever since 1908, where we started to refine gold. Just shortly afterwards, the first coins were struck there. At the time, it was actually the Royal Mint out of the UK, and it was only later that we became a separate entity. First, we were Department of Finance, and then later were our own separate Crown Corporation as we exist today. But we've got four main business lines. We obviously make all of the Canadian circulation coins, so your nickels, dimes, quarters, loonies, and toonies. And we do collector coin business, so we've got beautiful works of art that we spend lots of time designing new features, holographic images, making metals come up in absolutely different colors and different effects. So we're world leading in some of that work. We produce coins out of Winnipeg for countries around the world. So we'll work for, a dozen or so countries in any given year, and have worked for about 80 countries over the years. And then in Ottawa, we've got precious metals business. So we've got a refinery. We refine gold and silver, doré that comes from the mines, or recycled gold and silver. And we turn that into high purity bullion products. So we produce all the gold and silver maple leaf bullion coins in Ottawa. And we also do bullion products like the London Good Delivery bars and bars to be delivered to the Chicago's Metals Exchange and the like.
Well, I thought what we dwell on today is the exchange-traded receipts, and they are really a very different investment vehicle than gold shares or ETFs like the GLD Spider Trust on the New York Stock Exchange. Could you tell us in some detail about your exchange-traded receipts, both in silver and gold?
Okay. So an exchange-traded receipt, a bit of a different structure than what is out there. It's obviously not an equity like a mine. So in a mine, you own a share in a company that's going to go and do activities to find gold, take it out of the ground, and then when they sell that gold, they'll make a revenue. In this case, all an investor owns is directly precious metals. There are other types of products out there that track precious metals price by having a fund company or mutual fund or an entity like a trust that owns precious metals, and then the investors own shares in them. An exchange-traded receipt's kind of one layer simpler, where investors actually directly own the precious metals and not part of an entity. So investors directly hold that, and then we keep all of that gold and silver in our Ottawa facility. It can be withdrawn as required, but in terms of structure, it's traded on the Toronto Stock Exchange, and it's effectively a receipt for the precious metals that you own.
And it's different from the GLD Spider Gold Trust in that it's more of a direct, pure play in the sense that there are not intermediaries in between the investor and their precious metal.
Yeah, good question. So the grantor trust structure that the GLD is set up as, investors obviously own shares or units in that organization, and then they have custodial and sub-custodial arrangements with people that store the precious metals on their behalf in London, and that's what the investors own. And they work pretty hard to try to keep their gold price very close to the metal price. I guess the difference is there aren't as many entities and parties involved. And there's a couple of advantages to that. I mean, one thing is it allows us to offer the receipts a little bit cheaper. So we're a little bit cheaper than the Spider Gold shares in terms of fees. And I guess in the event that if you're buying gold as a kind of an insurance product, and in the event that the unthinkable happens and you get an event where you really, really require it, and there's a bit of a breakdown in some of the financial mechanisms, then you're going to want to know that your gold product works. And the question is, will all of these parties stand up to that issue in that event? Or are you better off to have gold held in Canada at effectively a crown corporation than another type of entity? And I think in some cases we've designed it so investors have just the precious metals with as few additional risks as we can, other than the gold and silver price.
Well, the annual management fee is very economical because it takes into account storage. And could you tell us what that fee is for both gold and silver?
Yeah. So for gold, it's 0.35% per year, and for silver, it's 0.45% per year. Silver costs a little bit more. It takes up more room in our vault per dollar value, and it's more work when you audit it. So we end up charging a little bit more there. But if you look around, I think Spider Gold shares is at 0.4%. So what is that, a seventh more expensive? And then a number of the silver programs are a little bit more expensive as well. And part of that's just the Mint runs all of its own vaults and its own facility, so we don't go out and hire custodians because we are the custodian, so it's a little bit cheaper for us.
I used the term earlier, surreal, and there is a great deal of potential for wildcard events around the world in the coming year. We've got elections in Europe, we've got the new Trump administration, and we just don't know what China is going to do. They seem to be keeping their cards fairly close as the new administration in the U.S. comes into place. So speaking for myself, and our listeners know that I'm a certified gold bug, and so they will accordingly fade my opinion. But gold is useful as an alternative currency, that is physical gold, physical silver, and it has proved its worth over the centuries in times of deflation, inflation, and currency devaluation. As you know, I do advise family offices and institutions on the vehicles and consider your exchange-traded receipt to be one of the simplest, most economical ways for people to hold gold bullion. Now, could you describe the redemption process and the ways that people can exchange their receipt into physical gold or silver?
Sure. So physical gold and silver redemptions, they're available every month. So the 15th of each month, or the next business day if it's on a weekend, is a redemption date. Investors can withdraw their gold or silver subject to some minimums. And the minimums are lower than most, if not all, of the products that are available, at least in Canada, but they're still relatively significant. So it's 10,000 units for gold or 5,000 units for silver as a minimum, which works out to be about 107 ounces of gold or about 3,000 ounces of silver. Subject to those minimums, every month people can actually withdraw the metal. They talk to their broker. They will get a form that they need to fill out. All we're looking for is what kind of format do you want for your gold? So you can take it in the 1-ounce coins, the mid-sized bars or the large trade bars, 400 ounces for gold or 1,000 ounces for silver. And then we will put it on the armored car carrier of your choice and send it to you per your delivery instructions. We're just looking for the information. What products do you want? When and where do you want it delivered and by whom? And then the bank certifies that, yes, you do own the units. And then we withdraw the metal and deliver it to you and cancel your receipts.
And in the case of storage, there are some very large family office institutional investors who actually buy the physical gold bullion and store it at your facility on Sussex at the Royal Canadian Mint. Could you describe that process and the minimum amount that an investor would have to be able to take advantage of that?
Yeah, we offer gold and silver storage. The minimums are kind of hefty. We're looking for at least a few $1 million in order for it to economically make sense for someone to store precious metals directly with us in a storage account. An exchange-traded receipt's an option for pretty much any size, but if someone wants to hold a specific set of bars aside for themselves, they can do that, subject to a few $1 million minimum. Our clients tend to be either asset management firms, a number of the financial institutions, but we also do have some gold that we keep, particularly for high wealth individuals, so some family offices and the like.
And of course, Sprott Asset Management store their gold at the Royal Canadian Mint.
Yeah, that's right. They store all the gold and silver underlining the gold physical products, so the physical gold trust and the physical silver trust are in the custody of the Royal Canadian Mint, and as well as precious metal from the mutual funds.
I'll make one of my outlandish predictions that over the next 10 years, we will see more pension funds, endowments, institutions deciding to have a portion of their assets invested in gold bullion being very different than gold shares. Gold shares are much more volatile, and I guess that one should probably go and see the new movie with Matthew McConaughey called Gold, which is about Bre-X, which is quite sobering as to what can happen when gold shares go the wrong way.
Yeah, I'm interested to see the new movie. I'm going to set some time aside and take my wife, and we're going to go and watch Bre-X. It was a story that I'd certainly grew up with. So,
do you have anything to add?
Well, I'm not sure about the prediction on the pension funds, so I can't say with any certainty, but I can tell you I've had more conversations as of late than we have in the past, so you could be right. People are paying attention, at least taking a look at what some of their options are in the pension space.
Steve, for listeners who would like to receive more information on the gold ETR and the silver ETR, could you give us the symbols and let us know the website and the ways that they can develop more knowledge on these investments?
Yeah, absolutely. The Mint has a dedicated website, reserves.mint.ca. So you can go in there. If you look for the information statement, that's got all the information about the program, discloses all the risks, and talks about all their rights. Another option, of course, always is to speak to your financial advisor about the products. And the symbols are MNT and MNS. So MNT is gold and MNS is silver. And MNT.U is the same thing, only in U.S. dollars. And MNS.U is silver, but in U.S. dollars.
Excellent update. Thanks so much for joining us. And we'll talk again soon. All the best.
Thanks very much, John. Really enjoyed being on the show.
Okay, folks, we'll go to a break. And after that, we'll conclude today's show with Amber Kanwar of our affiliate BNN in discussion with Gene Munster, Managing Partner